Is it too late to buy Celsius stock after this massive run? That's what we're going to talk about in this video. So it's no secret that Celsius stock has been nothing less than a bloodbath for the past year, and things have not been looking too hot. But the question is it time to start buying the dip, or have you already missed your opportunity after this huge run that is made? So in this video, I'm going to touch on some of the technicals of the company, and then we'll jump into the fundamentals, and then also take a look at their most recent earnings presentation to look at their new big acquisition that they just made of Alani Nu. So let's jump right into it. All right, so starting with the technicals, you can see here, and what was this? In May, we double topped here, and this is just a picture perfect double top, and ever since then we have been in a bearish downtrend. Okay, and you can see this trend line here that I drew, and again, we're looking at the daily time frame right now. We have been stuck under this EMA and this trend line for a good while now. All right, and Celsius bottomed around $21 here and had a nice run up pre-earnings, and then earnings came out, and if you were watching this, I personally thought this was the end of Celsius as we were selling off once again, and then all of a sudden we started to rocket ship up to almost $36. And I'm sure a lot of people are probably wondering, is it too late to buy Celsius after it's already made a massive run? Well, let's take a look at it. So in my opinion, typically when you have a run like this, you want to give it a couple days to see how things play out. Looking at the 4-hour time frame, I have this line of resistance here that it had a hard time breaking for a while, and you can also tell that once we broke below it, it started crashing, and then again we tested this a few times, and as you can see here on the 4-hour, that's exactly where we ran up to, and now we got rejected. Okay, and we've already had a decent pullback since its highs from earnings, but now we're sitting here and it does look like we're consolidating pretty well here. Okay, and so the question is whether or not it's a good time to buy based off the technicals. Okay, so if you're more of like a short-term trader, you don't want to get into this stock and it just start crashing on you, then I would personally wait and see if it holds this level. Okay, if it can keep holding, then honestly we could see some more upside, because at the end of the day Celsius was getting really oversold here. Okay, and even though this move of nearly 50% seems big in the grand scheme of things, coming off the all-time highs, we still have a long ways to go to recovery, and by no means do I think Celsius is going to reach there anytime soon. But in my personal opinion, and again, this is not financial advice, I could see Celsius eventually making its way back to $100, and this could be 2, 3, 4 years from now. Okay, but again, looking at the technicals, things are looking more bullish now that we've broken out of this trend line. What I would personally really like to see is for Celsius to pull back down towards this trend line. Okay, I think that would be a good entry and that's only if it makes it that far. Again, we could hold here after some of the good news that came out. But if Celsius were to fall back down around this level, in my personal opinion, I think that would be a great time to accumulate some more shares. And you could see, again, a test of this trend line and then a reversal back up. So that's all I really have when it comes to the technicals of the company, but I also want to take a look at some of the fundamentals. So if you're more of a long-term investor, you get a better idea of where this company is projected to go and whether or not it looks like a good long-term investment for you. All right, so I have the net income and total revenues chart pulled up over a long period of time since December 15, and you can clearly see that there has been a steady uptrend when it comes to total revenue, and that's something that we want to see if we're looking to invest in a company, is a steady uptrend in revenue. But that's not the whole picture. Obviously, what really matters is the net income, because you want to see how much a company's making after all of their expenses. And here you can see, things were pretty rough for a little while. They were hardly making any money. And then here in 2022, you can see that they had a big down year. But then ever since 2023, we've been positive a good bit. And this is probably a big reason why you saw the huge run up in Celsius stock. And then comes 2024, and you can see that this looks like it's going back down again. Okay, so it's hard to tell where this will end up, but later here we'll take a look at some of the analyst estimates to give us a better idea. Moving on, we have the free cash flow. This is another good metric to look at because you want to see a company have a lot of cash on hand. And you can see that Celsius has been growing their free cash flow pretty nicely. Okay, so on the balance sheet, this looks really good because they have a lot more assets and cash than they do liabilities, at least as of now. Next, we're going to take a look at the gross profit margin. This is also a metric I like to look at because it shows you how much money you're making, per drink you're selling. And so you want to see this go up. Right now, they're making 50% margins, which is pretty decent. It's not too bad. And at the end of the day, we see this growing. And as Celsius grows and, the economy of scales grows, essentially when companies get bigger, things start to get cheaper to produce and therefore would increase your profit margin. So I can really only see this getting better as time goes. And then, as I was mentioning before, the cost of goods sold. Obviously, this is just one way to look at how much it's costing Celsius to, sell one can of Celsius. All right. So whether that's with marketing expenses and labor and, inventory and manufacturing, all that, right? So, think about it. If you have a lemonade stand and, you sell a lemonade for $1, but, it cost you $5 for the lemons, and then it cost you, another $5 for the cups, and then it cost you, obviously your time and labor. And so selling one glass of lemonade, you haven't really made any money yet, right? So just to give you kind of a real life example, you want to see cost of goods come down essentially because, again, that's going to increase your gross margins. And you can see here in 2023, there was a pretty big peak in the cost of goods sold, but you can also see that it started to decrease here in 24. So that'd be something that I'd want to keep my eyes on. All right, so another thing that I wanted to look at real quick was the forward PE. If you don't already know, the stock market is forward looking. All right, stocks typically trade at a higher multiple than what they're actually valued at and today because, again, we are anticipating the growth. But nonetheless, I have a couple comparisons up here. So Monster being one of them. This is, one of the juggernauts in the space besides Red Bull, which is not publicly traded. But anyway, you can see that, this is a chart of the total revenues and, it is consistently growing, which you love to see. And you can see, again, when Monster was trading back here, we had, a forward PE of 45. So that was about the highest it's ever traded at. And now we're down here closer to probably, where it's traded at most of the time, right around 29. But again, just to give you an idea of where Monster is trading, and this is a well-established company, right? Now we go down to Celsius, and things look a little funky here, obviously, because it is a newer company. But, it's hard to tell from the chart because of these few outliers here. Nonetheless, right now, Celsius is trading at a forward PE of 34. Okay, so comparing that to Monster, which is 29, obviously it's trading at a little bit higher of a valuation. But looking at, the past forward PEs, Celsius is actually trading at one of the lowest PE ratios that it's pretty much traded at for a really long time. You can see here, and again, it's hard to tell from the chart, but you can tell, right here you have 36, 38, 41, right? And then let's go to 2023 when I was having that massive run up to 136 times earnings, okay? So it was trading at a very hefty valuation, a premium. And I will say, companies like this, all right, they have a lot of growth potential, all right? They have a lot more runway for growth compared to a company like Monster that has seen their growth phase already, and they're still growing nicely, but they're in most of their markets already, internationally and here in the US, they've pretty much, the room for growth is just not as much, right? All right, and then just real quickly, I wanted to touch on some of the analyst expectations when it comes to revenue growth, because again, we can see that it seems like it's on an uptrend now, but we want to see if analysts are still expecting this uptrend and growth stage to continue. And you can see here, based off the chart, yes, we're looking like analysts are expecting this to grow. Here, you have the analyst highs, and then you have like your mean or median, and then your low, okay? And then coming down here, you can look at the percent change. If we're looking at like the median, estimate, we're looking at, this year, obviously it's kind of slow, or in 2024, it was slow. But in 2025, we're looking to ramp things back up, close to 19%, 2026, 13%, 14%, and those are pretty steady growth rates. In addition, you can also see that the projections for free cash flow is expected to continue to grow, which is something that we want to see. And of course, I always like to take a look at some of the analyst price targets. And going out in the next year, the low on the street is $25, which, we were just at and actually pretty well below. And, in my opinion, I thought that was a pretty good buying opportunity. But at the median, we're looking at $38 with a high of 62. So based off of that, obviously, there still is a little bit of upside where Celsius is trading now. But one thing I want to keep mentioning is that these price targets and these numbers are not factoring in the new acquisition of Alani Nu. So again, some of these things could change, and I believe that's why we're seeing a lot of the optimism in the stock currently. Now, one thing I do want to mention about this new acquisition, all right, obviously there could be a lot of upside, but Celsius has previously, shown a really good ability to grow free cash flow. And you look at their balance sheet right here, what I'm looking at now, and you have your total assets, all right, over your total liabilities, and you can see that the balance sheet looks pristine the way it is right now. But with this new acquisition, I don't remember the exact numbers, but I think it's $300 to $400 million of cash that they have on hand that they're going to use, first of all, to buy the company, and then they're going to be leveraged after that, right? I mean, they're buying a company worth $1.8 billion. They're going to be leveraged now, and their balance sheet's not going to be as pristine as it was. And all that means is that there will be a little bit more risk associated with the company now, all right? Assuming both of these product lines soar like, we would expect them to, there won't be any issues. But if something were to go south, or let's just say the industry in general was showing a really hard time, having this debt on the balance sheets obviously is going to hinder the company a little bit more, and it could, harm the company in the short term. So that's just something to keep your eyes on. All right, so I'm going to try to zoom through this as fast as I can, but here you have a Celsius. This is just kind of at a glance. Let's see, moving on. So this is just kind of the revenue in the different areas that they're in now. North America, international sales. Okay, so you can see this compared to North America, over 311 million compared to 20 million international. So this is one area that they still have a ton of growth potential, all right? And this is one reason why I think some investors might, justify the stock trading at a higher forward price to earnings, because they see so much more potential, right? They're just now starting to crack into the international markets. And so we already went over the gross margins, the net income, all that good stuff. So here, looking at their retail sales, again, we can see this is on a steady uptrend. And then over here, you can see that their growth year over year actually declined in 2024. And this is probably one of the reasons why you saw, the stock starting to pull back pretty rapidly, because investors are like, oh my God, the growth is done. But I mean, it's hard once you start growing at these massive rates, like, 30, 40, 50%. Year over year, it's hard to maintain that, right? So even though it looks like it's slowing down, I mean, it still had 30% growth in 2024, which is, it's not terrible. But again, when you have a stock that's trading at this crazy evaluation, then investors expect, the good times to keep on going. And then here's another chart where you can see, revenue in millions. Again, we had this peak here and this big downturn here. This was when they're having some type of issue with Pepsi Cola and, their inventory and whatnot. I think all that is pretty much taken care of now, and things should start to look up again, as you can see here. But again, this is one of the reasons why we saw this big downturn in the stock. So we have, our number one brand, Red Bull, that has 36% of the market share, pretty crazy. And then Monster at 27% and Celsius in third place, but only 11% of the market share. All right, now this is where Alani Nu comes into play because they are in the number 4 spot, and this is what they're going to be taking over. So if we take their market share, that is going to get us closer to that number 2 spot. But the cool thing is with Alani Nu is that they are actually still rapidly growing, okay? To where it seems like Celsius might be slowing down a little bit, even though there still is a lot of opportunity. Alani Nu is, a newer company that is still kind of in that massive growth stage. So that's something to consider as well. Over here in this chart, you can see the retail dollar sales last 13 periods. This is pretty much, quarter over quarter. You can see this has just kind of been slowly declining. Again, another reason why the stock has probably been on a decline. And this is just kind of a chart showing past market share, right? So you have Red Bull up here on the top, pretty consistent at that 36, 37% market share. You can see that Monster has actually been losing some market share as the years have been going on, and Celsius has been increasing. You could say that that is part of the reason why, but here recently, Celsius kind of peaked at 12.3% market share, and then they've kind of been on a decline ever since. And again, this is another thing that could spook investors. Kind of like I touched on before, the international sales, I think this is a pretty big spot where Celsius has a lot of growth potential, but you can see they are growing international sales. It did dip here in the third quarter of 2024. Again, this is when, Celsius kind of in that downturn. This did not help at all, but in the fourth quarter, you see that jumped back up again, showing the potential there. And then you have your gross profit and adjusted EBITDA. And this is just kind of their presentation, but, just kind of their marketing plan, more people, more places, more often. I mean, obviously by acquiring a new line of energy drink that's still on that healthy kick, they're on the right track of that. And here you can see the different brands of, Celsius and Alani Nu. And, one thing I think that is interesting, obviously with Alani Nu, they have different product lines that they can start adding, which this obviously can help grow revenue. You have pre-workout, stick pack, shakes, snacks, and obviously the energy drinks. So, just other ways to continue growing revenue. Another thing I like to mention as well is, Alani Nu seems to be marketed more towards females, which is good, because that's going to open up a whole other market for Celsius as well. That's all I have for this one, guys. I hope you found this video helpful. Again, is now the right time to buy Celsius stock? Well, in a technical standpoint, I mean, it's really kind of hard to say because anytime a stock goes up, 50% in a short amount of time, there is that chance that it could pull back pretty substantially. And as I talked about it before, if you are a short-term trader, then I personally would wait for more of a pullback back to the trend line that it had to break out of and then look at an entry there. But on the other hand, if you are more of a long-term investor, then as I always recommend, I do think this is a decent company that is still, well beaten down from its highs, where you can slowly start to dollar cost average, right? You could buy some shares now, you can buy some next week, the week after that, whether the stock's up or down, right? And just average those shares, because I think 3, 4, 5 years from now, Celsius will eventually make its way back to, that $100 price point. I'm not saying it's going to happen anytime soon, but again, if you're looking in the long term, I think this is a solid investment. One thing you do want to keep your eyes on is, this new acquisition. But all in all, in my opinion, I believe things are looking up for Celsius. And again, if you're a long-term investor, I think in 3 to 5 years from now, you'll look back and say, okay, yeah, that was a good investment.